Hello, this is Alex from DiamondArm. Let's first off read this disclaimer carefully. I hope you are having a good day, because many people are not having a good day. It's been very rough in the financial markets. Turmoil due to the coronavirus, the oil war, big price war there, and another thing is that this market is really long in the tooth. So that's why in front of us here you can see the S&P 500, which is the stock market, the most important stocks in the United States. And given that these companies are, they are very global, they have a very global reach, this gives us a pretty good picture of what's happening in the world as well. So this is the bull market leading up to the dot-com bubble. So let's do some measurements. So if you measure this plunge, so minus 51-ish%, that's pretty sizable. Here is the financial, the housing bubble, minus 56-ish percentage plunge. And you can see that, this was a long bull market. Also, quite a few years of bull market. But this current bull market, as you can see, it's very long. So we have a very abnormally old bull market, meaning the companies have gotten very expensive. Many are very overvalued. There's a lot of psychology in play now. So let's zoom in a bit at what's been happening more recently. So this is the very nasty plunge that we've seen, and if you look at this plunge here, which happened leading up to 2019, that was around an 18% plunge, meaningful. This recent plunge here is approaching 19%. The big difference between this plunge and this, and also this one, is that this is very aggressive. This is very, very rapid, and you can also see that the volume bars here are pretty tall. So there's heavy selling happening, a lot of panic, and this should give you some caution, because a lot of people they say that you can always put money on the stock market, it's safe, and you're getting quality companies and so on and so forth. That is true up to a certain point, because what they miss, the permabulls, is that they only look at this. Okay, they look at charts like this, and they don't consider the reality that humanity has existed for many thousands of years, at least in a more commercial sense. And there's been many empires that have risen and fallen, many financial systems that have risen and fallen. And most would admit there are many systemic weaknesses in the current financial model. The current way is not able to handle the big challenges we have. The primary solution has been more debt, and there is a huge debt bubble that is just not accounted for, and that debt is not priced into this chart in front of you. So this is the US national debt clock, okay? So here you can see the US national debt. It is extreme. This is absolutely extreme. So is this sustainable? Obviously, this cannot possibly be sustainable. And you don't have to go too far back to see how drastically an empire can fall. Look at the British Empire, okay? It was huge. You don't have to go that many decades back until it was the big giant. It is not that anymore. It has utterly imploded. And yes, it can happen fast. Am I saying that the American Empire is doomed and is going to implode? No, I don't think that's happening anytime soon, but there are huge weaknesses. And there are other contenders. If we go a bit further back, okay, because you might ask yourself, okay, where could the selling stop? So you can see here this red line. The red line here is the 200-week moving average. You see that during this plunge, we did almost touch it. During this plunge here, we did touch it actually, intra-week, and then rallied. We are some distance away from it. So that is one potential level of support. You could also make the case that because this sell-off has been so aggressive, we could have what's called a dead cat bounce. Dead cat bounce, they can look a bit like this, when there is an initial attempted rally and then a sell-off. The key thing is that the companies need to be more fairly priced. They need to reach a level where people can step in, because people are investing in the market in order to profit. So if the market is not rising, then there will be an escalation of sellers. And that's how you can go from a correction to an actual bear market. You could also make the case here that the RSI, which is the relative strength index, it is very low. It is at 32. It hasn't been this low in quite some time. Even if we go here back to compare it with the financial crisis, the RSI is quite low at this point. It usually doesn't stay below 30, if you look very far back. So those are some indicators that could trigger some buying from humans, of course, but also algorithms that heavily rely on these kinds of technical indicators. So this is the stock market. It's been a very old bull market. I do think it will unravel completely in the not too distant future, simply for the fact that there are too many bearish factors that are simply not priced into this chart. The stock market, it is very short term. It doesn't look at the big picture. That's why it currently, with the current paradigm, it ignores the debt problem. It is something that will happen in the future. Same thing with the ecological problems, which are potentially extraordinarily bearish for the stock market. Because what the ecological problem means is that human overpopulation is a systemic threat. If human overpopulation is the major issue, that means we would have to have a global depopulation program. That would be extremely bearish for stocks. And that is not even remotely priced into this. It's something that isn't really a debate yet, but something that definitively will be more salient going forward, because the migrations we've seen so far of humans is minuscule compared to what will happen in the coming decades. It will be absolutely monumentous. So the big debate about how many humans this planet can sustain for the limited amount of resources, it will become a huge thing. And that will be spectacularly bearish for stocks. It will be bullish for other kinds of financial products for sure, and also for individual companies, individual subsectors, but these kinds of broad indicators, they will suffer greatly. But that's way into the future, but that kind of long-term thinking, that's very beneficial. You need to look far ahead. Of course, you want to act on the data we have at the moment. And that is this. This is the data we have. This is what we can trade on. And currently the charts are telling us there's panic. There is panic in the market, and there's good reason to be careful. And preferably look at other products that are rising, which you will see in the other videos, which will come out soon. Of course, whatever you do in the market, you want to let the trend be your friend, so be very careful, and have a great day.